JAMB 2016 Principle of Accounting, question 34. The question says purchases can be ascertained through the preparation of a option A says stock account, B says sales account, C total debtors control account, and then D total creditors control account. The correct option to this very question is option D. And looking at this, we have debtors total creditors control account. The total creditors control account has the debit and the credit side. The debit side is called the DR, while the credit side is called the CR. Of course, under the debit side we have returns outward, discount allowed, cash to supplier, and then balance. Then under the credit side we have balance brought forward, and then purchases. In order to arrive at these purchases, we need to add the debit side all together, which is a DR, add them together, and then we also consider items on the credit side. Now, the only item that was on the credit side is the balance brought forward. So, in arriving or getting the figure for purchases, we need to add the total of credits. That means total of credit here is just the balance brought forward. And then total of debit here are items which I have just mentioned, ranging from returns outward, discount allowed, cash to supplier, and then balance. So addition of all of them will give us total debits. So if we minus the two together, and then we are going to have what purchases at the credit side. So that means that in preparing total creditors control account, we are able to ascertain what are purchases, which confirms the option D, total creditors control account. And apart from that also, the total creditors control account is also known as or called purchases ledger control.